You want calls at 3 in the morning from angry tenants about a toilet leak? Yeah, me neither. So in this video, we're going to discuss how you can still invest in real estate passively and get amazing returns without breaking a sweat. And if you're new here, I'm Dr. Jeff Anzalone, periodontist on a mission to get you out of the rat race. Download the free passive income guide below the video. So let's start off by answering the question, what is passive real estate? Well, this is nothing more than an investment strategy that actually I began implementing after I hurt my wrist snow skiing. And this event was really my wake up call to the fact that, you know what? If Jeff can't use his hands as a periodontist, I couldn't provide for my family. So, this type of real estate investing allows you to earn money, allows you to earn income from real estate without being actively in management, actively involved in the process. Okay. So as a passive investor, you take your money, you put it in a real estate project, and then guess what? You start to receive a share of its profits. So how does passive investing actually work? Well, there's actually four main types. First one is my favorite one. You've probably heard me talk about forever, is real estate syndication. Now, this is groups of investors, limited partners who actually pool their money together to invest in larger projects that they couldn't tackle on their own. Now, I'm personally invested in several asset classes such as mobile home parks, RV parks, short-term rentals, apartments, self-storage. The passive investors typically receive a share of the profits based on their investment. Second is rental property. Now, rental properties, what you can do is you can actually go out, you can purchase a property, rent it to a tenant, and then you generate monthly income. Now, you're probably thinking, well, how is this passive? Well, it can be hands-on if you want to get involved or whatever, but it can be hands-off if you choose. It can be hands-on if you choose, again, to manage, to deal with the tenants, something breaks, whatever. But you can also hire a property manager to handle the day-to-day operations, thus making it hands-off, thus making it passive. Number three, real estate crowdfunding. This actually allows you to invest online, and you can go to these different sites, you can browse various projects, you can invest ones that you're interested in. This type of investment lets you diversify your portfolio and again, invest in real estate without purchasing the property yourself. But from my personal experience, I don't do these anymore because I lost 50 grand years ago. Why? Because I didn't know what I was doing. 100% on me, but I'm putting my trust in these websites because they say they quote vet all of these people, which I know from a fact that they don't, because I know several people that actually have real estate projects and they've had these companies reach out to them. Hey, do you have any projects we can put on our website? And that's not what they're advertising. They're putting all these numbers and fictitious numbers and they're putting pictures up. I put my money in a project in Oklahoma. They did not disclose that it was in a crime-ridden area. They did not disclose that the person, the sponsor of the project, thought that putting all this money in an apartment building that everybody was shooting and dying, that putting all this money in and fixing it up would make people come back. Had I known that, I wouldn't have done that. Again, you've got to know the most important thing is know who you're investing with. That's why I like syndications, because I get to meet with these people. I get to find out about them. I get to ask them all kinds of questions. That is why I stay away from crowdfunding. And then the next one is REIT, which is a real estate investment trust. So when you invest in this, it's kind of like you buying a stock in a company. They own, they operate, and they finance income producing real estate. These are either public or they're private. Now, anybody with a brokerage account, they can buy and sell their shares simply. They can go to their phone, just like any major stock exchange, if they trade publicly. Now, on the other hand, privately traded REITs, they're only available to accredited investors. What's accredited investor? That's somebody that the SEC recognizes they have a net worth of $1 million, at least $1 million, not including their house, or they make $200,000 a year single or $300,000 a year married for the previous 2 years, and they plan on continuing to do that. That's what the term accredited investor is. So privately traded REIT, they're only available to these accredited investors who meet, again, specific income and net worth requirements. People can purchase these shares in the REIT via the stock market. You can go to the Vanguard site, you can go to the Fidelity site or the Charles Schwab site or whatever. You can do individual stocks, you can do mutual funds, ETFs, whatever. There's all different types of ways you can do this. All right. Now, let's get into the next question is, what are the benefits of passive real estate investing? I talk to physicians, dentists, high income earners all the time. The number one and number two reasons why they do it, I've listed in this order. First one is passive income. So you invest in it. This is your opportunity to start replacing your income, or for me, I'm replacing my expenses. All right. I want to do that so I can slowly back out of practicing dentistry and then do this full time. That's my goal. Your goal may be different. All right. You may want to retire early. You may want to do something else. You may want to cut back. You may want to travel more, whatever it is. But you're going to have multiple streams of income. And you can do this while focusing on your biggest money making skill that you have, that you've trained for, that you've gone to school for so long. It's whatever you're doing right now. And then you just peel off that money every week, every month in an account. Then as it grows, you turn around and you invest for passive income. We've been led to believe that you have to work for 40 years until you can even think about retiring. This is another option. This is what we've been led to believe. But I'm telling you it's differently. I'm telling you I'm making 6 figures a year passively that the advisors and everybody else told me I couldn't do it. All right, I'm trying to tell you, you can do that, but you got to be consistent. You can't keep delaying it. You can't keep having analysis paralysis like a lot of people have. You have to start doing it and be disciplined about it. Just like you're investing in your 401k, you're probably having money taken out every month. Set something up like that. It's simple. But unfortunately, most people aren't going to do it, and that's why most people don't have any money. But anyway, I digress. Let me get back on my passive income that we're talking about. I'm trying to get you passive income. All right. Again, this can be a great way to bring in multiple income streams if you're investing for passive income, not you're investing for this big pile of money in a 401k that you may or may not be able to use depending on what your health is going to be in your 60s and 70s. All right. Number two, tax benefits, tax advantages. All right. Some people think, well, if you invest in something passive, are you still going to get the tax advantages that you would if you're going to be active? And 100% yes. So rental income, when you have rental income from real estate investments, it's generally taxed lower than other taxable income. All right. And then one of the biggest advantages of passively investing is something called depreciation. This is what the government allows you to write off the wear and tear of a property, even though the property goes up over time. That's the best thing since sliced bread. And once you change your mindset about that, it's a game changer. But depreciation, great tax benefit, mortgage interest, property taxes, all this allows you to lower your tax burden. The third is, actually I had a call with an Alabama dentist. He was 54, about mid 50s. And he said, Jeff, I've I've put enough money in the stock market. I don't want to do anymore. So he came to me because of this. He wanted diversification. He's still practicing. He's still a dentist, but he wanted to diversify his portfolio. All right. So now he's able to take and this is going to help mitigate his investment risk overall because doesn't have all of his eggs in the stock market. All right. So he can actually take it and go over different asset classes. He can go over different properties. He wanted to do syndication, so he can do it over different sponsors, different parts of the country. So there's huge ways to do this. All right. And this can also help to protect your portfolio against any market fluctuations and economic downturns. And then the fourth reason is less workload. So it's a reduced workload compared to if you were actively investing. So with passive real estate investments, you can actually go and you can outsource the day-to-day management to a property manager. All right. So really the only thing that you have to do is kind of oversee the investment from a high level perspective. What does this do? Well, it helps you free up your time and then you can focus on other aspects of your life or your business. Now, the next question is, Jeff, how do we choose the right passive real estate investment? The number one thing that holds people back is right here. It's their mindset. It's understanding their goals. Okay. That's number one, understanding your investment goals. So before investing in any real estate, passive real estate opportunity, whatever, you have to understand that your goals are your compass. You know, when you're holding a compass and you're in the woods or you're wherever, and you're turning, where does that needle, no matter where you turn, when I'm looking at you, if that's north, no matter where I'm turning, what? That needle is pointing north. So that is what your investment goals are going to do. No matter if you're looking over here, or should I get Bitcoin? Should I get real estate? Should I do T-bills or bonds or whatever? If you have a goal, a specific goal, all right. So if you know that you're looking for $100,000 a year in passive income in 7 years or less, well, if you're over here looking, well, is that going to help me keep in my strategy? It's going to help me keep in the right direction. If not, well, then you need to do something else. So knowing your investment goals is going to help you identify what the right opportunities are for you that's going to align with your needs. Number two is due diligence. So once you have identified potential investment opportunities, you want to conduct thorough due diligence, because that's a very important part. Just like when I got screwed over with the crowdfunding thing, I did not do my due diligence. I did not have specific investment goals. So I've learned from that. I'm always failing forward. And then I'm turning around and telling you, so hopefully you won't make the same mistakes and failures that I have too. All right. So your due diligence, you can actually go and review if they have a business plan. You can look at their financials. You can talk to their investors. I do all of that for my passive investing group for accredited investors. If you haven't joined, there's a link below this video. Then you can also work with a property manager. So a good property manager, they're going to be the ones that handle all the aspects of property management, including tenant screening, rent collection, maintenance, repairs, all of that. So what this is going to do, this is going to help ensure that your investment is very well maintained. And more importantly, it's generating this steady stream of passive income. Now, we talked a little bit over here about my favorite real estate investment. So let's talk about just a little bit more in case you don't understand what a syndication is. Again, it's a partnership structure that allows multiple investors to pool their money together to get into large real estate projects. You've got the GP, the general partner, or the sponsor. Those are the ones responsible for everything: managing the property, making investment decisions, getting the financing, sending you a check, everything. They also, and here's a question that pops up, Jeff, if I invest in a syndication, am I liable? Somebody slips and falls. If somebody shoots somebody or jumps off a building or has a wreck or whatever. Okay, no. The general partners, they're the ones that have the liability, not you. They also have the liability for the debt and the obligations as well. All right. Then you have the passive investor, that's you, the limited partner. Your only job is to provide capital to the project. Now, because of this, you're going to have limited control over the decision-making process, which, why would you want to make all these decisions if you don't really know a whole lot about it? Just like if you have a dental practice and somebody is investing, let's say you're expanding and somebody's investing, a silent partner, into your dental practice, and you want to open up multiple locations, you're the one that knows the most about what you're doing, right? So why would that person over there, is it really important for them to be decision making? No, they just want to make money, right? Just like you want to put your money with a good sponsor that knows what they're doing, that invests in the right assets in the right market. They know how to manage. They're solid operators. They know when to buy, when to sell, and you want to get in with them and to make money. Okay. So these two people come together, they form an LLC, and then the LLC, my drawing skills have actually gotten a little bit better. The LLC is what holds the property. So the LLC is protecting you as a limited partner. All right. So I know this has been a brief overview, but remember, this is just the beginning. All right. So to truly master real estate investing, you're constantly going to have to keep learning and gaining experience. And one of the best ways to do that is, as you learn stuff, as you read stuff, as you watch these videos, approach it to where after you read a chapter, after you read a book, after you watch a video, after you listen to a podcast, you have to go around and you have to turn around and teach it to somebody. Whether you do it or not, that's up to you. If you want to provide value to other people, like I'm hopefully doing for you, do it. But whenever you learn things with that mindset, then you're going to retain it more. You're going to be focused more. All right. So that's how to truly start to master things. So reading books, listening to podcasts, watching videos like this, joining real estate groups or networking. And it's all not just about investing and real estate. It's about all these other things. It's about getting in with the successful people in business, just successful entrepreneurs, successful people in life. And then you're going to start seeing they all have a lot of these commonalities. And one of the number one things that they all have in common is what we talked about earlier. It's they understand their goals. Now, you may or may not have goals. If you don't have goals, do me a favor, check out this video.